Good morning. Today is Friday, July 1st, 2016. As you can see, we're negative 12 cents. I said on my video yesterday that it was possible, based on this context, that we opened to a drop. And I must say that earlier, I've been watching this thing on my phone since 2, 3 o'clock in the morning. We were down as much as like 75 cents. This thing has bounced back up 1.5 million in volumes. And there's not much to talk about right now other than this pattern here definitely wants to introduce weakness and undermine this hourly. Yesterday, there were a couple of interesting continuation moves that I studied at length on my video. One was right around here, and the other one was here. See, you can time this when the 5-minute gets tired and you have a pattern of support underneath on the 1. Here's a 1 and 5-minute combination, and so here's the moment here, and it is given to you by a very nicely established 1-minute divergence. I mean, you see it when it happens, and then when it happens, you put it together with the 5-minute. It's just so iconic. Now over here, this is the end of the trading the day before. You have a little pattern that promotes upside on opening. Then you have this drop as it makes a 5-minute negative divergence over here. The price comes right back down. This is interesting because it's really not a divergence yet. It's a bottoming pattern. So when the price bottoms in here, you really don't have the reason to say this is it, other than it's a nice bottoming. It could be the beginning stages of a divergence on the 1 to undermine the direction of the 5. So it's a 1-2 pattern. 1 being the trend can establish itself here with a pullback later, making a poor man's divergence, or we have a full-blown retest. It was the second. It was almost, I don't want to call this a poor man's divergence as much as I want to call it a good-looking divergence. V-shaped configuration, nice bottoming on the technicals on the 1-minute, and a 5-minute that is now very much weakened in here as it pulled back and continued giving you the divergence, and now you have a head and shoulders pattern. This is, if anything, the moment right here, and I talked about this, and you are retesting below 206.75. The 207s would have been my choice. The 207 calls quarterlies that expired yesterday at around this time, at around 10:30 or so. Here's that study. And take a look at how much the market carried on. That entry here at the very end made 648%. But on the first go here, and I talked about this at length, it made 136%. This and this and this would have been the right exit at 11:07. Because this thing gets going right here, see? And you're following along with the 5 right there. Then this thing makes a pattern. It creates a technical top, but you have extreme direction on the 5. It pulls back. It continues. So this first stop at around 10:54 made 136% that I'm talking about. Then this thing pulls back, and then here, and this little one here by 11 is the one that made 160%. Just this tiny little bit of, this is 130%, pullback continuation, 160%. Then the technicals pull back pretty good. Then you have your continuation at around 11:12 or so. And that is right. This gives you 224. This is the one, not this one. See, right here. Now, the 5, this is interesting, okay? Because at this point, at 11:12 or thereabouts, right around here, this is 11:07, you're at 224. Right around here is this. Then you have this boom, boom, that is this boom, boom, right there. Then the price pulls back, continues. Now, what's interesting is that at this point, we have just a pattern, a lackluster one on the 1 to just kind of technically top that 5. So we introduce a pullback and then a continuation. Well, we already introduced a bend on the MACD here, so that's completely weakened. And you have this topping right around here at 11:30, and that is going to give us 278. From this point, the price really pulls back, only to then continue later higher. But this would have been, at this particular point in time, my exit. So that's the one pattern. The other pattern, if I can squeeze it in before the opening thing here, the other pattern is, you see, this thing gets going, and then the 5 creates this stopping in here that goes right along with the 15-minute. See, right here. So the 15 has a negative divergence, so that wants to work itself out, and it does. It does, like this. So it goes from here, that's the topping. So you have a 1 minute that goes along with this and the 15, so the price pulls back. But take a look at how the technicals immediately get long. So we're finding the trend. The 5 minute gets long against what the price actually did. This is one of those 1-2 patterns. So the 1 minute comes in here, technically bottoms, pulls back, continues. This was the second scenario of that particular possibility. There's your divergence, weakening on the 5. So you have a clear continuation, and on this one, the 209 calls. Entry just before 2 o'clock, right here. Another very clear 1 minute upside divergence. That goes with the extreme poise of the 60-minute chart. Here's the opening upon us, so I'm going to pause and I'll get back to you here in a second. So I'll continue that thought here in a second. Let's see, the market opening was very soft. Very, very soft. At 11 cents, 2.3 million. Now we're at 4 million. There's hardly anything going on. There's no move in here, basically. Right? And I can show you, as a matter of fact, here's the pre-market. There's the opening, so hardly anything there. See? The 60 advances from 135 to 140. The 15 loses 1 point, looks sideways. The 5 minute advances a little up, and so does the 1. Nothing going on here. And now the price is actually going up. I can now show you the 60-minute time lapse. Here's closing yesterday and opening today. This the daily advances. The weekly loses 1 little point. The daily advances, and we know what happened to the 60 and 15. Last but not least, I'll show you the larger time lapse. This is really the weekly time lapse. Here's Monday, June the 27th, which is earlier this week. Take a look at the monthly. It was going down. The monthly has actually right now plotted sideways. Take a look at how the weekly shrunk based on the... Yeah, I mean, no wonder the market manipulation that we are in the middle of is of such proportion. Take a look at this stupidity here. I was watching a video with Gregory Mannarino where he says that the Federal Reserve yesterday, or the day before, gave banks green light to use money to buy their own stock to prop up the market. Talk about market manipulation. And so going back here, take a look at the quarterly. The quarterly on Monday was actually down more than it is right now. Now, we understand how this thing works. And so right now, these long-term charts I'm talking about, really all of them, the daily, the weekly, the monthly, the quarterly, they are all adjusting and taking into consideration the huge pullback that we are seeing here. But they are not changing their technical negative pressure that is going on. And so this doesn't change anything. We are going to top out and we're going to come right back down. I will continue my analysis of the two little moves yesterday. We're on the second one here in a second. 9:51. So before I resume my analysis of the second entry yesterday, take a look at how the price has continued the upside here. It's really unbelievable. 61 cents, shy of 12 million in volumes in here. Take a look at that daily, the weekly. It's interesting to see how the monthly and the quarterly don't turn. Isn't that amazing? Even with this much upside, which is now to the tune of what? $11.40 some cents, $11.50. Take a look at this. We are almost back to the point of explosion. Makes me want to take a look at VXX. VXX has eclipsed the moment of explosion, which makes for a very, very dramatic two-day chart. It's going to be epic. Believe me. 10:03 and take a look at the price. More upside. Now up to 71, 16 million in volumes. The 5-minute continues its upside. The 15-minute still has that pattern. This 60 is starting to look tired. But not the 2 and 4. Boy, oh boy. Take a look at this, and even that daily. Looking pretty poised now. Okay? Insane. Here's a look at the 60-minute time lapse from 9:30 to 10. From 140 to 154, the 60, and even the daily, even the weekly. 10:47, we had the 1-minute top out over here, and I know that there was a possibility for the price to retrace back, to pull back like it did over here. Definitely introducing weakness to this hourly chart. Take a look at the direction over here on the 2 and the 4. I mean, can you say parabolic? Take a look at the daily for crying out loud. Take a look at that daily. Even the weekly has turned up. Wow. So let me conclude this analysis. So here's the second entry, right? The 5-minute got long against what the price was doing. And then we have a beautiful pattern. This would have been one of those 1 of 2 patterns, a 1-2 pattern, where the trend starts here, and then you have just a channel regression or a poor man's divergence. But in this case, we had a near perfect retest. And so that, along with the fact that the 60 is incredibly poised over here, and the 5-minute spent its fuel on its down cycle with the introduction of a pullback and continuation, which introduces weakness, undermines the down cycle, ends it. You have now an established upside divergence here. This is the moment of entry over here on the 209s. And so it's just before 2 o'clock. And you stay with it all the way here. But interestingly enough, you don't want to overstay your welcome. Let me show you this from the time lapse. This is that moment.
See? It's a very iconic divergence. Here's the 5. So we're looking at a different perspective here versus these two charts that have a hell of a lot more information, so that the patterns look a little more spread out. Anyway, that's the end of the down cycle, beginning of this uptrend. This is the context. And let's not forget that the 60 is superposed. The 15 had this opportunity here to move the price, which was here, which it did in conjunction with this negative divergence on the 1. So it did that, then we got long. 5-minute definitely got long. The 15 hardly did anything. The 60 hardly acknowledged. So that ends it. And then there's the context, the dailies on the upside, the weeklies on the upside, etc. Go look at this. By 2:05, the 5-minute is turning. There's a little bit of a channel regression here on the 1. And at the same time, you're seeing the birth of a negative 5-minute divergence within a negative divergence of the 15 that hasn't gone away. 2:10, the 1-minute is starting to ease its up cycle here. The 5-minute is going up, and we are seeing the birth of a negative divergence. We introduce a pullback and continuation. This is 2:20. I am at this particular point itchy to get out. 2:25, the 1-minute technically top. So I probably would have seen this come in right around here. So this is 2:25. Take out a couple of minutes, 2:23, 2:22 would have been my guess. 2:22, 176%. And then what happened? This thing moves down, responding to the negative divergence. So it is obvious that this 1-minute chart is diverging, and the up cycle of it has ended. It's running out of steam. The context is negative on the 5, negative overall, negative on the 15. And yes, this is the means by which this can introduce weakness to this hourly. So over here, with 170% return, 176% return would be my cue to get out. Take a look at what happens afterwards. Massive drop. The 5-minute enforces its own pattern, and the price drops. Now the sustainability of the drop comes into question, and then you have a continuation. There's the context. I am now introducing the context on the 5-minute time lapse every hour. I think it's a good idea. And so then you have now a new divergence on the 1, and so on. Price comes down. This thing runs out of steam. And this is another thing that I wanted to bring about into this discussion, into this analysis. Take a look at the cavitation of the price here. Boom, boom, boom. It's technically topping. And over here, we're technically bottoming. And what I should have done, this is 355, is this. You see how this 5-minute is cavitating over there? The 60 is incredibly poised. Go and take a look at the BXX. And if I take you to BXX, take a look at the cavitation on BXX. So the price comes up over here responding to this 15, right? The 15 comes in here and it suffers a series of pullbacks and continuations. This is really a negative type pattern. There's going to be a breakout. The breakout over here is most decisively going to be a drop. And if BXX tells you it's going to drop based on this picture, that means that SPY is going to break out to the open. Now, yesterday in my closing statements, I said it is possible for the price to drop, and it did in pre-market about 75 cents, and then it started resolving up to the upside. So the little bit of divergence over here laid itself out, but it finished, and then you have the move to the upside. Take a look at how the 15 over here also had already played out its divergence just as much as the 15 here had played out its divergence to the upside. SPY played it to the downside. Here, it ran out of steam towards the end of the day. You have cavitation. It ran out towards the end of the day here on VXX. You have cavitation. This is an unequivocal sign of a continuation move. Take a look at how the 1 minute chart here creates a poor man's divergence, really, because we don't have nice read. This is really a downside pressure pattern with the introduction of a pullback and continuation. And that 15-minute chart is extremely long. I have to pause for the picture at the top of the hour, but this 15 was extremely long. Take a look at MACD over here. Yes, it is a divergence, that's a given, but take a look at this here. This is incredibly long. Now, take a look at this Photoshop magic. Over here, what we were looking at over here is this 15, right? So yes, it is in divergence territory for sure. But what I want you to pay attention to is this. See, over here, the MACD turns when the 5-minute turns off, right here. This is that moment, and the 5-minute created this little upside divergence here. So this pattern puts this into motion here. And so you have this price movement right here, which is this price movement right here. Then you have this cavitation here, which corresponds to this cavitation here, right there. Boom, 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 boom. But what I want you to see is take a look at how VXX, the MACD over here, got long against what the price was doing. So this thing ran out of steam. This thing running out of steam and the cavitation over here means one thing and one thing only, and that is a drop. I just didn't care yesterday to study VXX and go do the comparison. I really need to start becoming more aware of these comparisons because they shed light on what's going on underneath. In this case, I needed reassurance for SPY. VXX gives it to me here. Here's Photoshop magic, but now on SPY. So you understand that all I did is separated the MACD and brought it up over here. So take a look at this divergence on the 15 right here. So that's diverging like crazy against this context, which is really poised 16, right? And so this pattern here is this 5-minute turning in the direction of this. So the price moves. That's it. This is as much as the price moved right there. It's nothing. Then the price continues. Then you have the cavitation right here. The thing about this cavitation versus VXX is that this cavitation has a negative pattern to it, and that is what led me to call a drop rather than a surge, which actually did happen slightly in pre-market, and then it resolves back to the upside. Because you also have to take a look at it in this context. First of all, the 60 is really poised, number one. Number two, the 15 got tired. This thing did as much as it could. The move to the downside expires. You have to have a rewind, a surge, and that's what you get. The entry would have been much more clear on VXX than on SPY. So let's just explore for a second what it would have been like to enter a position on VXX to the downside. A quick pause on what I'm going to show you on VXX. Taking a look at this thing here, real time, 12:16 right now. We have a bottoming on the one on a 5-minute that looks expired and long. The 15 has direction. The 60 is losing momentum at the moment. Can this thing surge? It can, but I don't like the context. It makes it risky. So we're just gonna let it play out. Okay, so the entry on VXX to the downside would have been as a result of this topping. Why to the downside? Because the upside ended with cavitation. See what I mean? This here, this divergence here, which I showed you on Force of Magic, puts this 15-minute divergence into motion, and that's all we got. Then the move to the upside stagnates, it runs out of steam right here, and the cavitation starts. Take a look at how we are starting to build a negative pattern on the 1 minute chart here. Let me bring this about like that. See, we established a technical top, and from here, the price is pretty much at the same levels, and our technicals develop lower and lower. And so the upside already took place. We're cavitating. The 60 acknowledged that pullback on the established trend. The 15 got exhausted to the upside. I showed you on Photoshop Magic how we got long. Cavitation here. The normal breakout is a continuation of the trend, and that will reinvigorate the existing upside pattern. And so that's how you make that decision and how you analyze this thing correctly. And so with that said, the entry, since we are topping at 14, is a 1350 put entry towards the end of the day. 354. These options, the 1350 puts that are July week ones that expired today, were 7 cents just before the close. Then you have the 15 minutes of additional activity for the exchange traded funds ETFs. This is inside the 15 additional minutes of ETFs right here. So you go from 7 to 16, more than 100%. And then on opening, I marked it over here. We had the regression on opening, which is right here. Had a little bit of a regression. Then you have the continuation. The 1 minute technically bottoms. We have momentum on the 5. We pull back long, make room for the divergence. And on the continuation over here, you build up a pattern. And this would be my choice for exit at 10:30, because I know I am going to technically end that 5, technically bottom it. And that 5 is going to bottom in response to the 15-minute upside divergence that we have here. And so 10:30 is the exit. This is 10:28, 300% from 7 to 28. Over here at 9:53, you have 185% return from 7 to 20 at 9:53. That would have been right around here. Then you have the regression right here, and then the magnificent continuation that gives you the pattern on the 1 to capitulate that 5 and thus an exit, and that's it. Now, if you had hesitated and you exit over here in panic mode, which means that you don't understand the dynamics of the price movements with the indicator, you need to have a continuation to flush out a divergence, introduce weakness to the 5. Take a look at how on the pullback here, we pull back long. Tells you it's nothing more than a pullback on trend. Take a look at how we hit the channel regression here. The 5 minute is dented, not turned. Continuation yields a pattern around 10:30. Now you have the down cycle of the 5 minute completely compromised, and this 5 minute chart is undermined. And now you have an upside divergence on the 1 that gives you this. But hesitation and lack of understanding gets you out of the trade right around here. What is that? 10:10, 10:11. See, 10:10, 10:11. That's a pullback. Then you have the continuation here, pattern. That's your exit. Then you have cavitation here. Boom, 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 which gives you this cavitation here. See, same levels. And then you finally have the collapse of those puts because the price resolves to the call side. The price goes up. Now, take a look at how the 5 minute right now is long in here, and now we have a pattern in here. We are starting to create pattern on the hourly. This pattern is the beginning stages of a divergence that we now need to turn that daily around. I want something like this or better looking. It's going to happen. This is one of those 1-2 patterns where the trend to the upside starts here, number one, with a poor man's divergence or pullback on trend, which is nothing more than a channel regression. See, a poor man's divergence is really nothing more than a pullback on trend hitting the channel without retesting all the way because we lack the energy to do so. I don't know if that's going to happen here. Several things going on. One is we are incredibly divergent to the upside, so that robs authority to the daily. On the other hand, we have a lot of momentum, and if I borrow the 2 and 4 hour charts, they still have momentum. These 2 hours seems to be softening. It's starting to lose poise, and we can see that happening here on the hourly. If we move on to SPY, we have a similar situation but in reverse. Take a look at how we are effectively, finally, with this negative pattern on 15, technically topping the hour. This is again one of those 1-2 patterns. The first possibility is that we establish the change in direction, the trend here with a poor man's divergence or pullback on trend rather than a retest all the way. The daily is incredibly divergent over here. See what I mean? And so that is what's going on. Today is Friday. It's weird. It doesn't feel like Friday, but there could be an interesting move. We are undermining this 5 pretty good. We are building a pattern here on the 1. Can we have the continuation? I just don't like the voice of the 15. That's my only problem with this. How is it looking on VXX? It's also a little too poised. If we move on to the other ones, let's take a look at Qs. I don't like it for an entry to the upside just yet. My Russell, too much direction. See that? Diamonds, same thing. 1255. I wanted to bring about the 30-minute chart. Take a look at it. We slowly hammered at it until you put it into submission. Looking at VXX over here, it's a pullback on the trend. See, this 5 minute is done. Take a look at that 5 minute, starting to bottom. It looks like the 210.50s could be put in the money. Take a look at how we almost reached the previous tops over here. It's unbelievable what these manipulators are doing with the market. Unreal. There's the price resolving to the upside. Take a look at that 5 minute. We're just shy of the 1 o'clock. So where are we at 219.98? So the 210s, the 210.50s. Let's do something. Launch the virtual trader. Take a look at where we are. $10,995.34. So we're going to go to trade options. We are looking at SPY to the upside. So fine chain, it defaults to SPY. Make sure you're on the right expiration. These are July 16th. We don't want those. We want the July week ones, slightly out of the money. The 210s we're right there. So I'm going to go for the 210.50s. They're 5 and 6 cents. Click on that. Here's my bid and ask. And so I'm going to go for market. And if I put 100 contracts, I just want to preview the order. Yeah, that's a little too little. Let's add 1,000 contracts. Gives me a warning. I say okay. It doesn't allow me to. Okay, so we're going to go down to limit. And we're going to put the limit at 0.07, 0.08. Let's do that. Preview the order. There it is. Let me take a picture of that. We're getting this thing at 12.59, 1,500 in commission, and 1,500 out at 12.59. There it is. So we passed the 1 o'clock, and take a look at how this thing is resolving to the upside. And now we are at 0. Here's a look at the 210.50 call options chart. Let's take a look at this. We are at 1,000. Let's see if this thing here can sustain. After this little rally here, you know, a regression is definitely called for. So I wouldn't be surprised. We regress, and that's going to have an impact in here. You just saw that. So let's just let it play out. Pretty steep regression. We are below our entry. So we're minus 2 grand. These guys are coming back down here. But that just reinforces the pattern on the 1. And we introduce weakness to the 5. Okay, so we retested all the way down. Here's another thought. That's why I did it virtually, and I didn't do it with real money. I knew that the price had a good chance of going up, but see, we had established a little bit of a trend here, and we had already dented the hourly. And so you could say this was a pullback on trend. This is the channel. This is as much as you got out of that movement. You need to identify this and get out. This thing bottomed all the way over here. We topped out right there. And we're at minus 3,000 now. In order for us to break even, we need to be 3,000 green here. So for that to happen, we need to move $6,000 to the upside. It looks like a lot, sounds like a lot, but it's not. A quick glance at VXX. Pullback continuation. Poor man's divergence, if you will. This thing's getting slammed. This is not looking good at all. Take a look at that. It's getting slammed. 3 and 4, so I don't see a lot of movement there. Two o'clock, so we came down here. Take a look at these options. And where are we at? Minus 3,000. Because we are getting back to the point of entry here. Now, this is what I wanted to really show you. Take a look at the larger context. This is where I think you should spend most of your time. This is running out of steam. If I bring VXX, VXX is now forming a divergence in here, but if it continues, the daily certainly says so, and the 5 minutes says so. We have a poor man's divergence in here. This thing goes down, SPY goes up, which is the direction of our 210.50 call options that we got right here. Again, keeping your eyeball on the larger context is really the best. This view here says upside. Boy, oh boy, how about this? Entered here, that drop, this drop, we are trending lower on that 15. My context was wrong. I knew that it was a long shot, and I knew that it was very iffy, especially since the context on the hourly changed and the 15 was pointing down. We are at minus 5 G's, and these things are worth out 1 cent. I don't think they are going to recover. So after 3 o'clock, take a look at what happened. This thing is finally doing what I was expecting over here. It's just that, you know, you need to let the 1 minute create more of a pattern. Take a look at the price, skyrocketing. 315, and take a look at this thing, skyrocketing. The options over here recovering. after being down here at 1 cent. If we go here, we're at minus 3 grand still. We have extreme direction on the 5. The 15 is in negative divergence territory. Take a look at that 30. Getting ready to build a pretty good divergence. Price is struggling to go up, but take a look at the direction on that 5. Take a look at the drop on VXX. Oof, that data is really poised. Here's a look at Qs. Russell. Diamonds. Back to SPY. We're pulling back. So we're going to more likely form a pattern. 340, take a look at the slam of the price on that divergence on the 5. So here's the end of the trading day, and this is an example of what not to do. You need to let this thing build its power before you take a position. This was much more organized. So let's see, the market closed, and take a look at this. The price gets slammed again. Okay, so I don't have very much else to add. The market already closed, obviously. I was going to show you the 210s. The only thing that I can add, and I can show you the 210s. The moment was just before 3 o'clock, and that is right here. Right here, these guys were about 8 cents, and they quickly moved to 22. So, boom, a little bit over 100%. Take a look at the pullback and continuation there, which is pullback and continuation there. Then the topping, a lapse, the other surge right here, clearly represented right there. So I'm not even going to do the markings and all that jazz. The one thing that I can share with you is the fact that that pattern was pretty easy to call. It was kind of like the pattern that I used to enter, but here's the difference, okay? Because I entered my position just before one. Yeah, just before 1, because here's the picture of the moment just before my entry. That's the virtual account. There's the preview on the 210.50 calls, bought 100 contracts. There's the purchase at 12.59. 12.59. Invested $6,000 plus 1,500. So that's the entry, and here's the actual technical picture. The problem with this entry, and now I can go back to the actual 5-minute time lapse. Yeah, because I was showing you here just before noon, but it's actually before 1. The problem with this one is that, take a look at the 1-minute chart. The 1-minute chart here is a little exhausted to the upside, and the buildup of upside is not strong enough. The 15 is pointing down, and it looks pretty poised. The 60 had already capitulated, so this was all in all a decision. The only thing that looked good is the 5-minute being at the end of its down cycle here, and definitely looking long. Here's the context at 1 o'clock. There's 105. The price started to resolve up. Take a look at the 5-minute. But this is as far as we got. Take a look. 107. This is the entry. By 107, we were at 8 cents, so we were a little positive. But the price here at 110 had already peaked and it's starting to come down. That was it. That was as much as this divergence was able to go. Then the 1 minute changes to the downside and we resume the downtrend. This was a pullback on trend. This is one of those 1-2 patterns right here. This is a negative divergence, and that negative divergence on the 5 here puts the 15-minute lackluster negative divergence into motion. We achieve momentum, and this is the poor man's negative divergence. But at this point, the 15 is already gone, so this is a pullback on trend continuation, pullback on the channel regression. This, if anything, is a poor man's divergence again, continuation, and another poor man's divergence, and so on. And the price just continues on its downside. This is that moment here at 110. Then you have the continuation. You have the bottoming of the channel right here with a pattern, weakness on the 5, so that works itself out slightly. Another regression. This is 2 o'clock. There's the context. Daily is pointing up, weekly is pointing up, but at this point the hourly and the 15 are controlling the price drop for now. To 10, another little price retest there. The 5-minute chart is already compromised. Take a look at the price continues. And this is that moment. This is that moment because you have now a 1-minute upside divergence that's pretty entrenched. The direction of the 5-minute is compromised. And so this is a moment because you are catching the 1 minute at the end of its down cycle. And that's the one that I was showing you just before 3 o'clock on the 10 calls. There's the price movement. There's the topping. Here's another poor man's divergence. That's also creating a 15. So that's it. The 210 calls, which is what I was showing you right here. Where the entry on this particular setup would have been right around here at 250. So if we go here to 250, so there it is, 250, 7 cents to 306 to 22 cents for a 214% return. I should have been able to do this, but the problem was that I was in the middle of a bullshit trade, and so that impaired my vision. But this one was much better. It is obvious that the 1 minute is going to push the price up. The down cycle is over, and you have a ton of support going on over here. See? Take a look. Price moves up. There's the big context. 310, we are topping out. That's it. 320, 310, pick your pick. You see the topping over here. It's going to get you out at around the same time. So that's pretty much it. Then the price starts topping out. You have a poor man's divergence on the 1 minute, on the 5 minute, and also a 15-minute shitty divergence. So that wants to play out. The price plummets right there. Then it finds support because it forms a 5-minute upside divergence with the end of cycle of 1, blah, blah, blah. 4 o'clock, end of story. That's the end of the trading day. Right there. we can bring about a 30-minute chart over here, and you have the decay of the up cycle. You don't have a nicely organized negative divergence other than a persistent downside pressure pattern. It's not even something like this. What we have now, the makings of a divergence. I think there is a great possibility of the price going back up again. And you know what's interesting? That these charts here say 357, when in reality they read 4 o'clock, and you have that drop. This is very interesting indeed. There. For some reason, this one is at 356. And so is this one. What is this bullshit? See that crap? On Russell is 4 o'clock, but on Kips is 356, and so is on SPY. Holy shit, on VXX is 351. What in the blue flip is this? How about that shit? That is a weird anomaly, and I cannot say I have ever seen that. Take a look at that, 351, 351. I am dumbfounded. But it doesn't matter. Take a look at the 2-day chart here. We have eclipsed previously established bottoms. Here, not these ones, but the last ones from the previous super explosion. See how the pattern continues to exacerbate itself? Take a look at SPY. That is a perfect retest, basically. Take a look at Qs, pull back on trend. Russell, that is a perfect negative divergence right there. Diamonds, perfect. Lower technicals, price at the same levels. It's insane. I'm doing a quick round over here. Take a look at all the gold stocks. When I take a look at GLD over here, the 60 had already begun its upside. It pulls back at the beginning of the day. And take a look at how the 5-minute holds it, holds it, holds it. Right here, there's this pattern right there. So you have some cavitation. This thing moves to the upside. The 15 is still in check. Price comes back down here. That 5-minute is done, and this thing explodes to the upside. Boom, the 60 desperately wants it to go up, and it finally does. The 5-minute and the 1 let go, and then boom, there's a pullback on trend, and then you have the continuation. Very interesting indeed. This is the reverse of SPY. There's the same bullshit divergence. SLV also moves up. The 5-minute lets it go finally. Although over here it's interesting how the 15 is reluctant to turn even though the price is drifting to the upside. This is something that I have not been able to decipher why this happens in 4.5 years. I haven't been able to decipher that. There's TBT, TLT. I'm looking for obvious patterns. I mean, the only obvious thing over here is the end of the pullback of the hourly. There's this pattern, and then it explodes. Then you have your divergence, which pulls the price down, but against this context, it's incredibly strong to the upside. Bunch of continuations, really. Take a look at USO here. And finally, UUP. That's it. I don't have much more else to add in here. So with that said, I will leave you with this. There is no market on Monday, so in observance of Independence Day. So we'll be back on Tuesday, July 5th. Until then.